There are cycles and they are simply regular events. Markets rise and fall. There hasn't been a time in which markets have gone up forever. It simply doesn't exist. There are different reasons for a crash, but our own central banks are always responsible for inflating bubbles. So what's going to happen this time? You came here for the truth, so let me unveil that for you. Today we are going to look at a wide spectrum of information. I want to cover the debt scenario, and I want to begin with something that I feel is posing a great danger upon us all. Mortgages are going from anywhere, around that $200,000 range up to the $1 million plus range. And depending on where you look around the United States, around Canada, the UK, and Australia, and everywhere else, you can see that we have, as a whole, taken on way too much debt. That debt is going to be very burdensome, very troubling, very soon. So this article here basically covers different scenarios. What people were paying before, what people are paying today, and what they will be paying. Interest rates are rising. And you can see that this puts a heavy burden upon the average individual because their monthly payments rise. So I'm going to show you some examples of this, and I think it really hits home. It's something that I've covered very often because you can see the Fed funds rate moving up. Separately, you see mortgage rates moving up. And that really hits home because the Fed funds rate ultimately doesn't matter for the average individual, but when it relates to their mortgages, surely they feel it. Okay, let's go through these examples really quickly. Example 1, household budget for mortgage payment, $1,200 a month, 30-year fixed. At 3.5%, they can afford a $267,000 home. At the current 4.86%, they have to slash their aspirations by $40,000 because the mortgage that they can afford at a $1,200 payment drops to $227,000. That means they're going into a less desirable area. That means they have some renovations to do. Maybe they can't get what they want. Maybe they have to move into a smaller home, and so on. At 6%, which is historically quite low, they have to climb down to a $200,000 home. They're going from above the national median price, $250,000, to something at the lower end of the spectrum. And all that's changed is interest rates. They were at 3.5. When they move to 6, this is what you'll see. You will see people being unable to afford their homes. And this goes for fixed, 30-year fixed mortgages, okay? At the bottom. Let me scroll on this. Household budget for mortgage payment is $3,500 a month, and that is, reasonable compared to what you'll see in these big cities. $3,500 a month. A lot of people would think that's insane. That's crazy. But that's actually what a lot of people do pay in the major metropolis areas. 30-year fixed again, 3.5%. They can afford $779,000 home. Currently, $662,000 home. And at 6%, it drops nearly $200,000 to a $584,000 home. So from $779,000, okay, to $584,000. And, what we're seeing here in Toronto at this time, $584,000 would be a one bedroom. $779,000, you could probably get a 2-bedroom. That's the difference. So at this interest rate, 3.5%, well, sure, they can buy that 2-bedroom condo. But then if interest rates move up to 6%, which we're not that far away, we're looking, and by the way, it's mortgage rates, 6%. we're looking at a 1-bedroom. So if it's multiple people, they have to either make do with the way it is, or they have to move out of the city and so on. Okay, and then the last but not least, areas like San Francisco, household budget for mortgage payments $6,000 a month, 30-year fixed, 3.5%, 1.3 million, 4.8%. It drops down by 200,000, and at 6%, we are looking at 1 million. So you're looking at basically a 30% drop here, and that is truly worrisome. There's a lot less money being moved. That means there is less liquidity overall. With these rising interest rates, they present us with a problem. Okay, credit cards are another problem. There's just too much debt out there. Mortgages, credit cards, student debt. I want to get into it all. Credit card delinquency rates. Particularly with small banks, you're looking at basically 6% at this time. And that is significant because it is at the levels experienced at the financial crisis. So that is something that I thought was important to look at. Look, the largest banks, yes, they have seen an increase over the few years, but it's still small. But the smaller banks, that's where this has really, really been showing itself as of late. Now, this right here may not make sense to you, but let me get into it. The Dow has been rising, but at the same time, we have seen the Smart Money Flow Index. Okay? And I'll show you here Smart Money Index or Smart Money Flow Index. It's technical analysis demonstrating investor sentiment. All right? Looking at the indicator is based on intraday price patterns. The main idea is that the majority of traders, emotional and news-driven, overreact at the beginning of the trading day because of the overnight news and economic data. There is also a lot of buying on market orders and short covering at the open. Smart, experienced investors start trading closer to the end of the day to have the opportunity to evaluate market performance. Okay, so you understand that? And you can see what has happened. Significant drop to the levels we haven't seen. We saw these levels around the financial crisis just after. Total assets of the major central banks. I love to see these charts here. It just makes me happy to understand where the rise of the stock market has come from. All right, looking at the ECB over the years, dramatically increasing. The PBOC as well, joining the club. The Fed, they really want to highlight this extremely, extremely small tapering. However, I want to highlight the fact that this institution has well over $4 trillion worth on their balance sheets. And you're looking at the BOJ with $5 trillion. It's really unbelievable to see how deep this hole can be dug. Pre-tax income growth in the United States. Now, while you have the richest of the rich people, the top 0.001%, these individuals here are making a killing, that's for sure. Going from 1980 to 2014, these numbers, you can see where they have increased. So we go down the list here. If you're in the bottom 50% of earners, you've basically made no increase in your income throughout this several decade period. If you're in the middle 40%, you've seen an extremely small amount. You don't start seeing some more significant rises until we get to maybe the top 10 or more likely the top 1%. And of course, as we go up in the status, then clearly it becomes more evident where the money lies, where the power lies, where the control lies. Financial stress in the retail industry is at a historic high. Moody's said in a report that the retail sector defaults hit a record high during the first 3 months of 2018 as the rise of e-commerce and the decline of malls continues to eat away at profits. It goes in talking about all the different companies here that have gone out of business. They want to point fingers at e-commerce. However, I've shown you statistically it is 10% of retail purchases. So I'm not fully convinced. Yes, it's made a difference. There is no doubt about it. But still, most retail purchases are done in person, not online. Okay, we know that is a statistical fact. Okay, it gets into more of this. I think that this is going to be a bigger trend as the years go on, as more stuff does move online, and as the economy continues to worsen. That is the true reason why this is happening. This is pretty insane. I didn't think it was possible, but due to the escalating tuition and easy credit, the U.S. has 101 people who owe at least $1 million in federal student loans. 5 years ago, 14 people owed that much. Now, it goes into the details of his personal story of how the individual accumulated that. I just think it's amazing that, as time goes on, this person's going to be owing literally $2 million because they're unable to pay it back. I read it in this article. They are not going to actually have the money. They're paying what they can, and it's basically just interest only at this point. It reminds me a lot of these interest only borrowers on mortgages as well. You get to the point where you can't pay. You can't pay. And unless you win the lottery, you're not going to be able to dig yourself out of this hole. Looking at Italy, they have seen massive and truly justified here, massive outflows that have taken place just recently, and there's a very good reason why this is happening. They're concerned. They don't know what's going to happen in the future. Money flees. Okay, last but not least, I found this image here and I wanted to bring it to you. I thought it was quite funny. We're paying so much money for our expenses these days. Something very simple like food. It just costs an arm and a leg. And I find it to be quite interesting to see how we see statistics of food inflation. 1.8%, and then we go to the store and we know I've polled the subscribers on the Money GPS. They've told me about a particular thing that they have bought week after week after week for so many years, and they've watched the prices rise and they've watched the contents of that particular item shrink. So you're getting double screwed over. Look at gasoline prices. I want to do an entire video about this. Oil prices hit a peak of about $150 per barrel. At that time, gas prices extremely high. But really, they were approximately the same that they are today. Oil prices are not even half of what they were in that time period. We are getting screwed over big time, and I hope that everybody realizes that. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that every single time. I want to thank everybody out there, whether you are supporting me through thumbs up and comments and subscriptions to this channel, or whether you do so through Patreon or donating through PayPal or cryptos or anything. I just want to say thank you to each and every one of you. It truly means a lot. This channel has grown quite a bit over the past few years, and it's just really good to see so many good people out there. All right. So if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you need to do is go over to Amazon. There's a look inside feature, and that's going to allow you to flip through the pages of these books to see if you like them. Take care.